Hey folks, this video is on why I sold Valero at 127 when I think it possibly could top out at 150. Why didn't I stay in there and try and get that 150? Well, first off, I think it's overvalued. Okay, that's first. And let me open with a disclaimer. This is not economics advice, financial advice, or advice of any kind. You and you alone are responsible to seek out the professional advice that is right for you. This video is for entertainment purposes only. But I wanted to share this so people get an idea if you're thinking about investing and so on and so forth during this turbulent time, which is a wonderful opportunity to make money, in my opinion. As I've shared, I want to share this point that is one of my principles of investing. So I sold at 127 when I know it could go to 150 with irrational push up. Anytime we get beyond fair value of a commodity stock, I'm out. And the reason why is if we have a severe correction or recession, I don't want to be in there because it's going down with everything else. But let's get to the fundamentals as to why. One, we tripled, okay? Boom. Frank Wallington, my first financial teacher. Pigs get slaughtered. So if you made a lot real fast, either pull half off the table or get out altogether, depending on the algorithm and the fundamentals and the economic situation we're in, right? So that's rule number one, pigs get slaughtered. Okay, so out, pull off to the side. But another thing that I saw that I didn't like about Valero was with a windfall earnings quarter, they did not raise the dividend. Certainly not significant. So they already know they're going to correct, okay? Because if they thought it was up and away, and that was their forecast for the future, they would raise the dividend and reward shareholders. They have not, okay? So that tells me that there's the management of Valero realizes that this is going to be a short-term cycle, and I believe it's short-term also, and here's why. With diesel prices at $6 a gallon, I think they hit yesterday, oil prices over 100 per barrel, gasoline well over $4 a gallon, okay? Our economy cannot sustain this, okay? The spending is going to contract greatly, right? Because we don't have as much excess income. We've got rising food prices, rising fuel prices. That usually leads to less consumption. When we have less consumption, there's less need for a lot of things. We're also coming out of winter where you have heating oil and natural gas and electricities jacked way up. Why? Because of heating your home, right? So now we're heading into the cooling cycle, which is mostly electricity for air conditioning. So that leaves oil and natural gas maybe not so important. They have to produce power, yes, but you know, that's constant anyway, isn't it? Okay, so that's why. Those fundamentals right there are why I dumped Valero. And also, if the price of corn continues to stay high, Valero is a biodiesel producer. It's huge, right? And if the cost to produce that corn is up, oh, that might weigh on their margins, right? On biodiesel. Now, I think biodiesel is going to do very well this year, but I just want out because I don't think the margins are going to be all that great. Plus, they're getting subsidized to make it anyway, okay? So that's another reason why I'm kind of out of Valero. They're just a refiner, remember that, and a producer of biodiesel, okay? So while we need a lot of things, and Valero's going to do very well long term, I think the markets are going to continue to correct harder. And as markets go down, people that were leveraged in order to cover, you know, when they go underwater, they have to sell good assets to cover those losses, okay? So companies like Valero and others during those flash crashes also get sold off because, you know, you gotta sell the good to cover the bad, okay? And that also puts pressure on gold and silver And that's why I buy gold and silver low on the SLV, or just silver because it's more volatile. I buy it when I find it at the lows and ride it back up and then jump off that wagon as well when I think it's reached fair value again. So I would prefer to be in off this train than on it right now, because the upside is only 23 more dollars. The downside could be as far as $50 down from here. Okay, so that's why I'm out. The risk no longer equals the reward anymore. Okay, so now I'm out. And remember, when I got into Valero, when I talked about it way back when, the reason why I got into these oil plays was because I could clearly forecast where we were headed. Okay, the U.S. was reindustrializing. We were opening the economy back up, right? Or we were going to. And we're pulling a lot of production back from China, internalizing. And that was going to put pressure to get more output. At the same time, due to COVID, oil companies had slowed way down on output, hadn't they? Okay, because there just wasn't not a need for it. So we had this rubber band expansion and contraction type thing going on. And that was easy to forecast, that the price of oil was going to go up significantly, right? Well, now the economy can't handle these prices anymore. So oil has to go down, okay? And I'm going to do another video on the history of oil and how I believe gold and silver may be in direct correlation to the history of oil. That was a complete, wow. Anyway, I think you'll enjoy it. It's kind of conspiracy theory, kind of just fun with numbers, okay? But I think you might find some rational thought in there and say, wait a minute, maybe the world isn't everything it seems to be. Right now, people are rushing into Valero because their financial advisors are telling them to. Now, if I have time to sit at a desk and teach you how to invest or tell you how to invest, I might not be that good at investing. Because if I was really good at it, I'd be at my own desk on my own computer making my own trades. Does that make sense to you? So just because somebody has a label, financial advisor, doesn't always make them that bright, especially when it comes to money. Now, there are many good ones out there, yes, but they also follow the train. Oftentimes, they're in the crowd, okay? I'm selling out when a lot of people are running in. Why? Because it's just risk-reward is not good enough for me anymore. Not with the forecast I'm now having, which is a potential of an economic slowdown / possible recession. Fed raising rates, commodity prices at extreme highs. We've seen this before. Maybe 07, the exact same cycle. Overvalued real estate, commodity prices at all-time highs, oil at highs. What do you think, folks? It's the same recipe that we had in 07. So I do forecast for myself a flash crash in the markets. I'm seeing that coming, and I'd rather pull this off the table since its risk reward is not there anymore and have more ability to play the flash crash and possibly profit greater from that, okay? And that's why I sold Valero as I did. And mainly because they just didn't raise that dividend. And that tells me a lot. I've been at this a long time. If a company sees a clear forecast going forward and is buying back its own shares, it will raise the dividend, okay? Because it pays them in the end, doesn't it? Okay, so that's another reason why. When I see a company not raising that dividend, that tells me a lot. It tells me they don't see a long-term forecast like that. Now, when oil corrects and all that corrects, is it possible that Valero will then raise the dividend? Yes. But right now, the dividend's only 3%. Okay, when I bought it, the dividend was 10% or 11%. Okay? That's part of the reason why I bought as well. Okay? So now we don't even have that anymore. That dividend is so low, to me, risk reward is not there anymore. Okay, so I would not be a buyer of Valero at these prices, no matter what anybody was telling me. That's me. This is not financial advice. Please seek out the financial advice that is right for you in all of your affairs, right? But that's how I invest. I like to be early out rather than trying to get that last little bit and be the pig that gets slaughtered, okay? So I wanted to share that with you. I don't think our economy can handle these fuel prices and food prices and the price of housing all at the same time. It's the same algorithm that presented in '07, right before the crash of '08, '09, and through 2010. So, will it happen now? I don't know, but I don't care. I'm getting prepared. Because if this doesn't change soon, we will have some sort of economic turmoil. You can pretty much be assured of that, huh? Because consumption's already going down. There's less discretionary spending going on right now. That's already been shown, okay? So be aware of that also. What's going to happen to the globe? Other countries, smaller countries that have to pay for wheat, corn, soybeans, and those prices are so high right now. And those are smaller countries with smaller economies, but yet those commodities have doubled in value in a short period of time. What kind of financial pressure is that going to put on them? And what kind of spending slowdowns will they have as well? You see what I mean? All of this, go back and study 2006 through 2009. Study that paradigm of all sectors of economies and see what you see. Jim out.